everybody, and happy Monday. It is April 20th, 2026. Today I'm going to be going over the trade that I took today. Now, before we get into it, my P&L is negative $150 on the day, which it absolutely should not be. I took one trade in the morning, close to 9:34 is my guess. I took an inverse fair value gap and was stopped out. I don't trade ICT. I don't know why I tried to, and I lost $60 on one micro. I then decided to force another trade on a candle that wasn't very straightforward. It didn't have the confirmation that I needed to take the trade, but I still did because I didn't want to miss out on the move. So basically, a trade I took out of FOMO. This I took normal size, so I ended up being down almost $280 on the day on all of my accounts. This is honestly where I should have stopped, but I felt like I shouldn't have taken any trades, and if I look for a setup that I actually should have taken, it'll win and I'll be able to cut some of my losses, which isn't a good mindset, but that's what happened, and I ended up making a little over $100. So the only trade I'm going to be going over is the one that I should have taken and should have been the only one that I should have taken. All right, so coming into market open, we have our pre-market high, our pre-market low marked out. We also have our new week opening gap marked out right here. I like to mark out the new week opening gap because a lot of times price likes to sweep that and then continue lower. And then of course the New York previous high, which is all-time highs. So going into market open, we mark out this red candle right here. This is the candle from 9:30 to 9:45, and this will be our opening range. Drop back down to the 5-minute time frame, and then we simply just need to wait for a break and a potential retest with the confirmation, volume confirmation, and then wait for a short. And then we finally get something that interests me, and that is this red candle right here. You'll see this red candle is the first candle that closes strong to the downside, has that rising volume, and it also has a decent setup for shorts. The decent setup for shorts is that if we take our Fibonacci retracement tool and draw it from the bottom to the top, we have that 50% retracement and that 0.705 retracement that lines up very nicely with VWAP as well. This is where you can justify taking a short position, which I did, having your stops be at that 15-minute range low or that candle high. You can then target a 1-to-1 or about a 1 to 1.3 for about 25 points. Take some trims there, but then have your final price target be that pre-market low. So I could have caught 96 points on this, but I ended up taking trims at that 25, 30 point range. This is because I really just wanted to lock in some profits and cut some of my losses for the day. This should have been quite literally the only trade that I placed today, but I ended up placing two others, which made it a red day. So we are slowly learning, trying to get back to my discipline of, 1 to 2 trades a day and making sure those trades are picture perfect. So thanks for watching today. I will see you guys tomorrow.